Okay, next we're going to have another Express talk, and this one is titled AIRA as a Strategic Function in an Evolving Capital Market Landscape. To talk to this topic, I'd like to welcome Simon Rose, who's founder and CEO of Rose & Co, based in New York City. Simon's going to offer a US perspective. He and his colleagues are out from New York. Welcome, Simon. Offer US perspective on market conditions, investment trends, discuss the impact of macroeconomic factors such as tariffs, shifting capital flows and the rise of passive investment. Against this evolving backdrop, he will discuss the increasing strategic importance of IR and why it must be recognised as a critical C-suite function. Sorry.
Ian, thank you. You read someone else's blurb. That's not what I'm talking about. No, I'm just kidding. Thanks. Hey, thanks everyone. So I grabbed the gentleman from Citi. Can we turn that light down? I grabbed the gentleman from Citi and I said, do not leave. And he was very obedient, didn't leave. I will give you a shout out. The Citi Real Estate Conference is best in class. It's the best in the world. And it's a great place to go in Miami. If you need restaurant recommendations, see me after. Ian, thank you, and thank you for your team. I didn't say you could leave. This is our second opportunity to be with you all in Sydney for your annual shindig, and I want to thank Ian and his team for doing a spectacular job and putting together a great set of events over the past few days. I also want to thank my team for getting me here and getting to all the meetings on time, so thank you, me and Brian. We had a dinner last night, and Ian looked at me and he said, okay, you can make some comments. And I said, do you want me to look at the wine list? Like, what do you want me to talk about? And he said to give you an express view of what I was going to talk about today. So it gave me an opportunity to think about it for 12 hours. We have a global perspective on IR. We come to your conference in Australia. We're active in the United States with NERI, with CIRI, with the UK Society, with the Dutch Society. If you have a society, we contribute. And it gives us an opportunity to learn things in each locale, and what some of the issues that you have here are shared in Amsterdam, and some aren't. Some are local, specifically to your market. But what I think is universally true, and having spent 30 years as an investment banker and the CEO of a mid-sized US investment bank before I saw the light and went to IR, is how woefully unappreciated and underinvested IR is. Probably not news to anyone here, but I think that we all need to do a better job of articulating it without being self-serving. And I think that historic context, which is something at my advancing age I can provide. When I started in the industry at Lehman Brothers in 1990, the IR job, the primary job, was to get the annual report together and make sure it went into the envelope, had correct postage, and was sent out. That was the biggest part of the IR job, at least in the United States. And it is a lot different than it is today. It evolved, and now it's evolving more and more. It used to be that there was a cast of thousands there to support the IR effort in all kinds of ways from the banks. There was a full integration between the investment bankers, the research team, the sales team, the corporate access team, and the traders, with one primary purpose, which was to help the corporate. I see a lot of that, the remnants of that, here in Australia and in some unique markets like Scandinavia. But in the United States and Europe, that doesn't happen anymore. And through a regulatory mechanism that has been erased from a fully functional and regulatory basis, because they've taken the revenue stream from the investment bank and the revenue stream from the research department and the corporate access teams and separated them. So if your company does a merger and uses Goldman Sachs as the advisor, the bankers are very happy, but the analyst and the trading team and the corporate access team don't participate in that big moment. What they do participate in is the commissions that are derived from investors. That's their sole form of revenue. And as a result, there are two clients at the firms now. There's the corporate client served by the bank, and there are the investor clients served by the analysts, the corporate access teams, the research conferences, et cetera. So two different fiduciary obligations, and we sort of stumbled around with that for a while, and it sort of worked for a minute. But what's changed is there is a different client of the investment bank now, and that's the high velocity hedge fund. Any guess at the percentage? I'll give you some information. 7.5% of assets under management in the United States are hedge funds. 7.5%. What do we think the commission wallet is from that 7.5% to the banks? Over 20? Over 30? I'm going to auction. I'm going to keep going. No, I'm not going to do that to you. It's 80%. 80%. So if you're an analyst, you better have a corresponding 80% of your time talking to Millennium, Citadel, Point72, Balyasny. I'm sure you've never heard of these places, you never get a meeting request, but you are told about all the new pods that have these long holding periods and how fantastic they are. And look, I think that meetings, and I did a tour of duty as a hedge fund manager many, many years ago, there are some very interesting conversations. They know more about the sector than you, they'll tell you that. They're very interesting conversations and engaging, you can learn things, but they are a great brokerage client and an absolutely terrible, in fact, non-existent shareholder. So how do you get to the long-onlys that are the great shareholders is the conundrum that is across all of the different IR departments around the world. More in the United States and in Europe than here, because your system still is sort of functional, right? There's a camaraderie, there's a knowledge of one another. What I was hearing from the gentleman from Citi today was, it could have been 1999 in New York, right? How things used to be. And so I hope the regulatory environment doesn't get here, because it made the banks an incredibly inefficient partner. But that's what's happening around the world. And when you think about engaging outside of Australia, that's what you're up against. That's the backdrop. There's a woman at UBS in New York, what's her name, Sophie, who does a really good job. And she's an army of one. For North America, in the United States, there are 15,000 registered investment advisors. In Canada, another 500. 650 of these managers matter, and they can be first page holders for any company that's listed in the ASX 100. But there's no real avenue to get to the depth and the breadth of the market and who is really a relevant potential shareholder for you. And that is now incumbent on you. And you don't have the support of 30 people at Macquarie who sell Australian equity into North America. They don't exist anymore because it doesn't work as a business line. And it's the same with the European banks. Several years ago, I brought in the global head of sales at Barclays for North America, and they now have 2 people, Barclays, in North America responsible for all non-US equity. having run sales businesses for many years, each institutional salesperson can cover about 25 accounts maximum. That's it. We used to have 8 people on Fidelity, and the numbers just aren't there anymore. So those calls that they're talking about, they don't happen. And if you are a senior salesperson in the Western Hemisphere, you either are doing something else or you're about to, because they don't want to pay senior people. They rely on email. So I think the decimation of the research departments and the age reduction and the number of stocks that people follow is somewhat known. All of a sudden, the person who's very knowledgeable is moved aside, and the number of stocks that their replacement has quintuples. But the decimation of the sales teams around the world is even more. You don't see it. There's no Bloomberg function for sales at Morgan Stanley. But theirs is an email business. There are 80 to 100 priority investment groups for each investment bank. And as I previewed, the vast majority of which are hedge funds. And those are the ones that could service. Those are the ones that attend conferences. And outside of that, you need to have a different avenue of reaching these investors. So we've gone from legions of thousands around the world where you could curate who you were going to use to reach the intended target. But because of the change of customer and because of decimalization and a lot of other issues around the world, you no longer have that sales force to lean on. It's you. And I talk about the stages of grief. The first thing you do is you go out with a broker, you have a really bad week. You say, okay, I'm going to switch brokers. You go to a different broker, you have a really bad week. You say, okay, I'm going to get a targeting service so I can tell the broker who I want to see. So you get the targeting service and you tell the broker you want to see, and they don't do it, and then you use another broker, you give them the targeting service, it doesn't work. So then you start calling them yourselves or emailing them yourselves, and you're looking at a portfolio manager that gets 900 emails before 9 o'clock in the morning, and you don't get through. The hit rate is like sub 10%, even for major companies. And I'm talking about, we work for companies that are $300 billion market caps and are household names around the world. They can't get through. So what do you do? And what the solution is. And it's not by reducing your budget every year. It's not by, starving you. You have such an important role for public companies. You have thousands of employees that are working so incredibly hard to create value. And what does everyone want? The board wants the shares to be higher. Your C-suite wants to be the shares to be higher. The employees, especially if they have an equity sweetener. You, the shareholder, everybody's in the same boat. The only person that doesn't want the shares to be higher is a short seller, and screw them. So, how you do it and how you fund that and how you create a marketing effort for your stock is absolutely tactically and strategically critical. In Europe, you're either a hunter or the hunted. You either have a valuation that sustains potential acquisition, or you're cheap for an acquisition for a private equity fund in the US or a public company to be a division of. That's the stick. The carrot is you're the hunter because you have a full valuation and you can have the lowest cost of capital, because we're in a weighted cost of capital business around the world, right? So success and failure is incredibly important, and you're the tip of the spear. And yes, you have a big communications job. How do you tell your story in the most effective way? How do you reach these investors? You don't have the help anymore. How do you do it? And all of these questions are incumbent on you, and how well you do it will amplify the results of the company. Right? If a tree falls in the woods and no one is there, does anyone hear it? And with the stock, no one hears it, right? You have to be proactive. There used to be, and it was so annoying, management teams that said, oh, well, I'm just going to build a great company and they'll come, right? I called it the build it and we'll come team. And they will, and they'll be private equity investors, your competitor, and activist shareholders. Those are the three people that will come first to help you rationalize your valuation. But that's what's going on around the world. And our business, and I'm not going to do a commercial because I always find that incredibly boring, our business is to help companies to fight through that and find where to go and who to speak to and who's relevant of the thousands and thousands of human beings out there that you need to have a relationship with and iterate your story to. And that's why I left my fancy offices and CEO position of an investment bank and am now in this industry, is because we're the only firm that is an advocate for public companies around the world. And it resonates with, again, huge mammoth companies in the US, where we help them in the US and around the world. It's European companies in Europe and the US. It's mind-boggling that these people need help, but they do. And it filters all the way down. The smaller you are, the more you need. Did I go long enough?
Yes, thank you.
Cool, thanks.
Thanks very much, Simon. Is there a quick question from the floor to Simon? Yes.
Thanks so much for that. Troy from Vicinity Centres. We're about 60 on the ASX. Can be higher, can be lower, but say around about that. We think we've had a great story to sell overseas, but sometimes, particularly in the US, we just not even a blip on the scale. So just wondering what your response is or how you approach that when you got something that's, we think we're kind of a big deal in Australia, but we're not a lot overseas.
I didn't hear it all, but was it the gist of it, we're a big fish in a little pond and we go to the big pond, and how do we swim with those other big mammoth fish? Every asset manager, every portfolio manager has different mandate. And the first thing is market cap. What countries can they buy? What industries do they buy? What kind of, what's their discipline? Are they growth investors? Are they growth at a reasonable price? Are they value? Are they deep value? Are they distressed? Every flavor of ice cream you can imagine we have, right? It's about finding your customer. I could not imagine coming from Australia to try to find that person. I use the analogy, if I brought my family over for a vacation and rented a 4Runner and said, okay, I'm going to go to the Outback, I'd be dead, right? So it's a little bit more dire, but I wouldn't be successful, right? Ultimate failure. It's a really, really impossible task. So, again, that's why we exist, and that's the service we provide companies. A year ago, we came to Australia. One of the people said something about the foreigners trying to come here and grab information from the locals. I was in the back of the room. I felt a little offended. I come in peace. I don't have any tariffs, not wearing a red hat. So, we started working with some companies here, and we've had amazing success finding the audience from them, whether from big caps here, which are mid caps for us, to small caps, where we've been extraordinarily successful in putting them in front of an audience that they'd either never seen or hadn't seen for a decade. So the good news, I'm going to give you some good news. The demand is there. People want to meet you. It's getting the two of you together. And is there any portfolio manager in the room? Okay, good. They have no social graces. They're very awkward people. They're introverts. They don't know how to come find you. They need people like us, brokers, to make that connection. So unless you show up on a quantitative screen, that your phone's not going to ring, right? And the thing about Australia is that on a relative value screen, you generally come up as expensive, generally. There are certain sectors where that's not true. So if you're a silly person like me sitting in Dubuque, Iowa, you say, well, that's expensive. I don't need to look at that anymore. Well, they need to understand that there's a constant bid in Australia from the funds that it's a higher low, right? If things go bad, it's a higher low. It's just a different metric here. So the quality of the business you have to look at and then adjust your perspective on relative value, and you can make a really good investment that'll be very profitable, irrespective of the fact that it jumps off the page as being a little bit expensive.
Thanks very much, Simon. We better leave it there. Please thank Simon again in the usual way.